Class 12 Accountancy Numerical Problem Solutions presented by NCERT.com. In this video, we are going to provide reconstitution of a partnership firm, admission of a partner, problem 31 solution. The problem statement is as follows. A and B are partners sharing profits and losses in the ratio of 3:1. On 1st April 2000 XA, they admitted C as a new partner for 1/4 share in the profits of the firm. C brings 20,000 rupees as for his 1/4 share in the profits of the firm. The capitals of A and B after all adjustments in respect of goodwill, revaluation of assets and liabilities, etc. has been worked out at 50,000 rupees for A and 12,000 rupees for B. It is agreed that partners' capitals will be according to the new profit sharing ratio. Calculate the new capitals of A and B and pass the necessary journal entries assuming that A and B brought in or withdrew the necessary cash as the case may be for making their capitals in proportion to their profit sharing ratio. So, as per the problem, we have to calculate the new capitals of A and B. We should also pass the necessary journal entries. See, these capitals should be in proportion to their profit sharing ratio. After calculating the new capitals, the partners either bring in additional cash or withdraw the surplus cash, and the new partner has joined the firm for 1/4 share in the profits. After the new partner has joined, and after making all the necessary adjustments for goodwill, revaluation of assets and liabilities, the capitals of the old partners were calculated to be 50,000 rupees and 12,000 rupees. But these are not final capitals. So, after the admission of the partner C, the profit is divided and is given to the new partner C. The portion of the profit given to the partner C is equal to 1/4. So, the partner C's share is equal to 1/4 and the remaining share is equal to 1 minus 1/4. Considering 4 as LCM, the numerator will have 4 minus 1. This is equal to 3/4. So, after giving 1/4 profit to the new partner C, the remaining profit is 3/4. This remaining profit should be distributed among the old partners A and B. So, this remaining share 3/4 should be distributed among the old partners A and B in the ratio. What is the value of this ratio? It is given in the problem that the old partners A and B share their profits and losses in the ratio of 3:1. So, this ratio here should be 3:1. So, after admitting the new partner C, the new share of the old partner A is equal to the remaining share 3/4 multiplied with his proportion share 3/4. Multiplying the numerators and denominators, this is equal to 9/16. And the new share of the old partner B is equal to the remaining share 3/4 multiplied with his proportion share 1/4. Multiplying the numerators and denominators, this is equal to 3/16. And the share of the new partner is directly given to us as 1/4. See, to calculate the final ratio, it would be easy for cancellation if the denominator of this new ratio is also 16. So, let's multiply the numerator and denominator with 4. Multiplying the numerators and denominators, we get 4/16. So, the final new profit sharing ratio is equal to 9/16 is to 3/16 is to 4/16. Cancelling 16 in all the denominators, we get this ratio as 9:3:4. Now, as per the problem, the capitals of the partners should be in their new profit sharing ratio. If the total capital is known, we can easily calculate the individual partners' capitals. But the total capital is not given to us in the problem. But it is given that the partner C brings 20,000 rupees as capital. But as per the profit sharing ratio, the partner C's capital should be equal to 1/4 of total capital. So, as per the problem, this 1/4 of total capital is equal to 20,000 rupees. Let's send this 1/4 to the right. So, the total capital is equal to 20,000 rupees multiplied with 4/1. This is equal to 80,000 rupees. So, now we know the total capital of the firm. We can calculate the capitals of the individual partners as per the new profit sharing ratio. So, the proposed amount for partner A's capital is equal to the total firm's capital amount of 80,000 rupees multiplied with his profit share proportion of 9/16. Cancelling with 16, 16 ones are 16 5,000s are. Now, if we multiply the remaining 5,000 rupees and 9, we get 45,000 rupees. Now it is given in the problem that after all the adjustments, the capital of the partner is 50,000 rupees. But as per the profit share proportion, the capital of the partner should be 45,000 rupees. So the surplus in the capital that should be withdrawn by A is equal to 50,000 rupees minus 45,000 rupees. Subtracting, we get 5,000 rupees. This is the amount that partner A should withdraw from his capital. So partner A's capital account should be debited with 5,000 rupees. And considering that the partner A has directly withdrawn this amount in cash, the cash account should be credited with 5,000 rupees. And the proposed amount for partner B's capital is equal to the total firm's capital amount of 80,000 rupees multiplied with his profit share proportion of 3 upon 16. Cancelling with 16, 16 ones are, 16 5,000s are. Now if we multiply the remaining 5,000 rupees and 3, we get 15,000 rupees. Now it is given in the problem that after all the adjustments, the capital of the partner is 12,000 rupees. But as per the profit share proportion, the capital of the partner should be 15,000 rupees. So the additional investment that should be made by B is equal to 15,000 rupees minus 12,000 rupees. Subtracting, we get 3,000 rupees. As this is deficit, the partner B should bring additional investment of 3,000 rupees. So partner B's capital account should be credited by this additional capital amount of 3,000 rupees. And considering that the partner B has brought this amount in cash, the cash account should be debited with 3,000 rupees. Let us now proceed to journalize both of these transactions. Let us first write the title as journal. Let us now have the rest of the journal format. Let us first write A's capital account as the debit entry. Let us also write the text DR to indicate that this is a debit entry. Let us then write the debit amount of 5,000 rupees in the debit amount column. Leaving some margin, let us write the cash account as the credit entry. As you know, the credit entries start with 2. Let us then write the credit amount of 5,000 rupees in the credit amount column. Let us then write the description or narration of this transaction as being excess capital withdrawn by A. Let us now draw a line to mark the completion of journalizing of this transaction. With that, we have completed the journalizing of this transaction. Let us now journalize the other transaction. Let us first write cash account as the debit entry. Let us also write the text DR to indicate that this is a debit entry. Let us then write the debit amount of 3,000 rupees in the debit amount column. Let us then write the partner B's capital account as the credit entry. Let us then write the credit amount of 3,000 rupees in the credit amount column. Let us then write the description or narration of this transaction as being the capital deficiency made by additional cash brought in by B. With that, we have completed the journalizing of these transactions. And with that, we come to the end of the solution to this problem. Thanks for watching. Edixit.com is started to promote effective and efficient learning process to help the students with their learning requirements. To watch all our videos, please subscribe to our channel. Also, please click on the bell icon to receive a notification as soon as a new video is published. Please click on the like button if you like this video. Thanks for watching.